NVIDIA earnings came out Q2 2020. I got so excited that I dropped $22,000 on NVIDIA stocks last week. And I must say that I can see a potential 600 or 700 valuation of the company with their future potential expansion and semiconductor domination. Stick with me on this video. I'm going to tell you why NVIDIA is a buy now. Welcome back to Family Investment, and yes, today I'm going to be speaking about NVIDIA. NVIDIA's Q2 2020 earnings is spectacular, and I'm just going to speak of why I've bought this share. But before I go, I would like to share that I used to be an NVIDIA shareholder. I had about 75 NVIDIA stocks averaging $165. I started buying them in September 2018. Yes, and guess what? During the pandemic, I sold all of them because I was scared. I was shocked that I might lose my job. I was scared about remortgaging. I need to keep cash. It was fear. It was fear that made me sell my NVIDIA around about under $300 when I was at all-time high and then drop back in February. I regret it. Yes, I regret it. It's one of the biggest regret I have in my investing career in my last 8 to 9 years. Something I've learned. I still believe in the stock. Took me a while to get in, and until the Q2 2020 earnings came out, I could see why NVIDIA is not stopping. The momentum is strong. Yes, we speak about Tesla and Apple stock split, but people are forgetting that NVIDIA has got a long road ahead, a long, beautiful road ahead. So in this video, I'm going to show you the breakdown here at the side, so you can click on the timeline in the description if you want to skip. But I highly recommend you to stick throughout this video on why you should buy NVIDIA now. So yes, I've spent $22,000 nearly with fees plus minus on 42 NVIDIA stocks, averaging around about 495. I managed to get it before the jump on the Friday. I could have got it before, but it kept going up. So I've got it, I've locked in. So my strategy, my plan is to hold long term. Obviously, I'm not going to trade them anymore. I've written in my book, Alex, do not be an idiot. Do not sell NVIDIA. Buy NVIDIA for its future. I wrote that. I'm going to tattoo it in my hand to remind myself. Think about it. They're still overvalued here. The future value of NVIDIA, it will and yet will be realized among different factors, which I'll discuss. But if they do drop, I'm prepared to buy more. I'm prepared to make NVIDIA my biggest holding yet again, because it was in February 2020. I will make NVIDIA my previous biggest holdings, up with the likes of Apple, Amazon, Tesla, Unilever. So let's kick off with their spectacular earnings. Even before the earnings, NVIDIA was already up 106%. Since the start of the year, with S&P were only up 4%, 106%. That's staggering for such a semiconductor company. And when the earnings came, they blew the expectation out of the water. Remember, the expectation was high, and they beat it even higher. That is amazing. And the share price never really went up after the earnings, so because everybody's been focusing on Tesla and Apple. So let's drill in. So the earnings was 2.8 per share, but the expectation, the streets were saying 1.97 EPS, which is really, really good. Revenue, 3.65 billion expected, and they beat it by 3.87 billion. So it's a 50% rise in the whole annual compared to last year. It's a 50% growth, guys. 50%. Poof. So the gaming, this is what NVIDIA's core business started off as 1.65 billion, rose 26%. Not surprised with all the gaming market going a potential next PlayStation and Microsoft Xbox that's coming out. Not yet, but this is in the works. And what's really capturing is it's 1.75 billion from the data center, from the cloud data center, which is actually for the first time that another business has surpassed its gaming business. It's got data center that's boosting behind it. That's up 167%. They've got clients like Google Cloud, Amazon data center. And there was another 14% that came in because of the Mellanox acquisition for their switch. And then the fact that, that's not all. They were saying they're producing their new generation data center card, which is the A100, which is still not accounted yet. They're spending money on it, but the sales will be rolling in soon. And then also the new next generation console. So look at it here. They've beat earnings and there's more room for growth. You know, the next expectation is way even higher. Still looking for a broker? Don't wait. Join Hargreaves Langston. I use it for my family, my pension, the kids' investment, all in one basket. It's a really good company, great security, amazing products. You'll not regret it. So join Hargreaves Langston today. So now let's get to the valuation of Nvidia and how I see it. So I use Graham's intrinsic calculator. I always use it during the time of the earnings because they put their earnings that have beaten and the future next quarter's earnings. So if you use Graham's intrinsic calculator, I've added the future EPS 2.53 plus 2.18 plus 1.8 plus 1.89. So it's basically the next 3 months is towards the end of the year and then looking back. What should they be worth? And this will blow you away. The PE ratio for Nvidia is about 90 and the PE ratio for Tesla is about 1,000. So you can see why my focus went to Nvidia rather than Tesla. 8.4, value of 500, expected growth of 30. I'm trying to be conservative. The intrinsic value was $843. That's a growth of about 40%. That's what they should be worth. And then if you put a growth at 40, which is I think most probabilistically realistic. Is that a word called probabilistically realistic? Anyway, they should be about 1,090. It's crazy. And then if you say let's 45% growth rate, it's about 1,213. Is this Graham's calculator real? Is this real? Are people not seeing this? What am I missing here? Seriously, what am I missing here? It's actually showing that it's Nvidia with the future take what they expect that are severely undervalued just now for the future value. Not value today, but for the future value, future expectation. But it's bright. It's the future is bright. That's where and why. Second reason why I've plowed it and will be plowing more on Nvidia. Alright. Now I am going to do the technical fundamental analysis. So I'm going to be using my tool called stockcut.io. And yes, I do have a partnership with stockcut.io and also promoting it. And also I'm using it. I do use it on a regular basis. And I was looking closely on it using stockcut.io on my mobile phone because it's easy to use. And I'm going to run through with you what I see, what I found as well as me using on my premium account. Actually, a premium account that you pay for an annual basis. So let me just walk through with you on how to use it as well and what I see, just to share my views. The third reason on the technical analysis, how I find Nvidia it's really good value. So as you can see here, research specific. So Nvidia is NVDA. On the ticker, search Nvidia, and when you search it, you will come out with a dashboard. As you can see here, you can see the dashboard here, Nvidia Corps. And what I really like about it is they give regular updates and through my mobile phones as well. So as you can see, updates this week because I'm following them and it comes through my email. It says next X dividend date, and yes, Nvidia pays dividends. Very low, but they do pay dividends. I think it's better than Disney. They pay about under 1%. So they said announce the dividend on the 1st of September 2020, and they will say useful. Yes, I find it useful. And then the relative strength index, the RSI, if you try your data, is they have a stable relative strength index, bullish. So it's bullish trend, people buying. You can see a high influx of money. It's going up. So it tells you on your phone without looking. So that is it came in this week. Obviously, reason with all the people start buying. So if you go to the dashboard, you can see really quickly it's fair growth potential because it sees it as it's what it is just now from the earnings. This is an AI. It doesn't see the forecast for the future sales or the future equity value. This is what they see just now. So it's fair growth potential. Strong operation is a huge take. Outperform the market. It shows that it's a market leader. An overvalued stock. Yeah, it's an overvalued stock. Okay, so that's about the cash availability. If you scroll down, outperform the market, past investment return. We're not really caring about dividends or share buyback because it's a growth company still. And you can see past investment return year to date 115%. So it just compares how much it's grown by. Total 3 years 122%. So this is basically the breakdown figure of what you can plot on the chart. And then on the overvalued stock, multiples valuation. So this one is key to understand why it's overvalued. So the last 12 months P ratio is 93 times. So P ratio of 93 indicates that it's a growth company. If you go to the likes of Apple or you go to the likes of Microsoft, they're way lower, about the 20 to 30s, 35, 40s. But this one is still growth. People are paying for their future value, so it sits at 93. And then 12-month stock price is 24 times its sales per share. So whatever it's sold, the share value is 24 times more. And then free cash flow, price book value. So it's all multiples of 20, multiples of 60. So in this day and age, we always pay for the future values in multiples of 24 because it's a growth stock and people see this is how people value it. You're paying for the future value of the company here. So you have to realize how much future value of the company you are paying for. And this data helps here. And this is one of my last favorite ones, overexcited investor, the sentiment value. You watch CNBC and all, and you're thinking, is it a good or bad? You can't, but let's break it down to data form. No emotion, break down data form. So the first one that I like is chalk-in money inflow. So chalk-in money inflow is basically, you can see the volumes of money going in and out. As it shows, it's in green. That means in the last 20 days, there's more money coming in than going out. Okay? So it shows that people are excited about it, overexcitement, and money is coming in more in the last 20 days. The short interest is also key because you want to buy on the dip. So for the short interest just now, it's on the orange, and I did check a few weeks ago, it was on the green. And because when the earnings came out, the movement started slowing down. People started taking profits before the earnings came out, and it went to the orange. And that I couldn't wait for it to go to the red. You go to the red if they had the bad earnings, but they didn't. It's on the orange. So I took this one. The key reason why I took it. People are selling and lets me go in. And then the next one, simple moving average. It's 50 days moving average, and it compares the 50 to the 200. There's this golden crossing. If you all check on Google, the golden crossing of 50 and 20-day moving average. So at the moment it's in green and 1.38. This is known as a golden average, meaning that investors are bullish, pushing the stock market price higher. So don't get too excited today because it's going to go high. And finally, the relatively strength index at 76. It means that investors are excited, they're buying. People are buying this company. This is the momentum. RSI is basically the momentum. The RSI, people are buying. The momentum is being driven by momentum. Okay. And then, if you scroll down, you get other analysis. I believe the last analysis was up to 2019, 2020. There was one in January by a human analysis, and so you can see there are four folks out there. Even the CEO, Hoda Meher, has got it on her portfolio. I think she's an investor in Nvidia, and that's what you see on here. And so areas of strength. So if you want to tell yourself what's a strength, so it's a founder-led company. So Jensen Huang is the founder and his leading company. It's like Jeff Bezos running Amazon. It's like Tim Cook, like Steve Jobs running Apple. So no leadership changes. So it's one man who owns it. That's his full passion doing it. High-rated CEO. It's written here. Diverse and independent board, a good board, multiple revenue segments. Things to watch is employee satisfaction, dependency on few customers because they have all the customers are huge. Amazon, Google, Apple. Business model strength. And reasons to worry is that geographical expansion is unlikely. So this is what is done by the AI. But then again, NVIDIA produces a chip with Taiwan Semiconductors. So Taiwan Semiconductor will be fighting for the new A100 chip. So they can send it supply. So it's not like Intel where they do it all in-house. And now they're trying to ship it outside for cheaper supply, which is Taiwan Semiconductor. So reasons to worry, maybe they're just in the US, but their products are all over the world. So when cloud computing comes out, it doesn't matter what company you are, cloud computing will be at a data center place. So something that I'm not going to be really worried about. And maybe the thing that I will add myself in this book here is it's basically the overvaluation and how they can achieve to expect to hit the next quarter earnings and the one after that to meet expectation, because expectation is very high. One of my other final two reasons that I'm forecasting about NVIDIA again is the buying out of ARM. I know ARM very, very well because I went to the same university as the founder of ARM. So he's my alumni, Professor Robin Saxby, and I've seen him talk about ARM back 20 years ago when I was in university. And the future for ARM is finally they have beaten Intel. Finally, they are in every console, Nintendo Switch, Apple iPhone, future iMacs. So ARM chips will be almost everywhere, overtaking Intel. So if Nvidia buys ARM out, they're buying a huge chunk. With 50 billion expected to buy, I think it's cheap. I think ARM should be worth $80 billion. More than what they were bought previously. And they're all great British Cambridge company. And the second reason for my liking on Nvidia, it's again for the, there's so much more, not just ARM, but them expanding in next generation and now future cars, AI cars kicking off. Tesla will be kicking off future self-driving vehicles with Nvidia powered GPU in those systems. Research is still ongoing. The likes of Uber, Domino's, Tesla, BMW, Audi, everybody is racing for self-driving vehicles. And Nvidia will play a part. Nvidia is like the shovel to the gold mine race back 100 years ago. So that is my second key reason. And should you buy? Like I said, it's high. You're buying for the future values. Don't trade it when it dips. You have to buy. You have to persevere. It's long term. You have to hold it 2025, hold it 2030. It'd be great. I think it's great for pensions. It's great for your kids' investments. It work out great if you're a young fella in your 30s, in your early 40s. Buy it, and by the time when you hit 60, Nvidia will be somewhere. They were somewhere up there. And also rumors, which I'm saying rumors, we shouldn't use this as a valuation, but big rumors about NVIDIA stock splitting as well. And we could potentially see a 5-to-1 or 7-to-1. Maybe not soon, but maybe when they hit the $700 valuation, they might go to a stock split eventually. But these are the rumors, which is bigs out there. And these are my reason. I hope you enjoy it. And please leave a comment below on what you think as well. And if you've got any questions, please ask away. I'm here to help you all.
Alright, before I say goodbye, please do like and subscribe on my YouTube channel, follow me on Facebook, and if you want, support me on Patreon as well, so I can produce content like this every single day for you guys, to give you guys value. So please do share, share this video to help us grow our YouTube channel, yeah? Yeah. Alright guys, 3, 2, 1, bye bye.